Well, this year has been one busy one for mergers and acquisitions. Just yesterday, Warren Buffett announced the largest deal of his career. The headline today in the Wall Street Journal, M&A activity on pace for a record. According to my next guest, deal value so far this year has topped $1 trillion, a big jump from the same time a year ago. Joining us right now is S&P Capital IQ's Rich Peterson joining the conversation. Rich, good to see you.
Great to be here.
So lots of mergers and acquisitions, domestic, international. And is it because we've got such low interest rates?
There's a variety of factors. Obviously, a lot of companies have a great deal of cash on the balance sheet. According to what we see from the S&P Capital IQ data, there's been over $400 billion just in all cash deals. That's the highest dollar amount since 2007. It's easy to write a big check, as Warren Buffett did yesterday. But the fact is we're seeing a lot of deals in healthcare, information technology, industrials. In fact, yesterday's deal with Berkshire and Precision Castparts was the biggest ever deal in the industrial sector.
Yeah, for sure. Fred Lane, do you think this continues?
Well, I think what's interesting about the statistics is we have $1.2 trillion of value year to date. We had $715 billion year to date a year ago, and the number of deals is actually basically flat. And the only sector where deal numbers are greater is in the $1 billion and greater. So these large deals, these headline deals are now really what's happening. And it's strategic. It's all strategic.
Strategic, meaning large corporations taking over other companies.
Yes.
They're not like private equity firms.
That's exactly right.
Kraft Heinz, Fred, they reported yesterday another Buffett deal, his previous big deal. And what they said in the announcement, because it was a disappointing earnings announcement from the two companies, they separated the earnings. They said next quarter, watch out, because we're going to do better. What that means is they're going to get rid of jobs.
Sure. But the fact is, we talked about the deal activity. The top 10 deals announced this year account for 43% of the aggregate deal value. Actually, now.
But these big companies, Rich, are reducing jobs.
Yeah.
They're getting.
That's right.
That's the point. Yeah.
Well,
you're absolutely right.
That's sort of the footprint, because obviously there's duplication in back office and technology.
That's the only way they're getting growth in earnings.
Right.
The top line isn't growing. They're getting rid of people.
Unfortunately, that's what they're doing in a slow growth environment.
Yeah.
They need to grow, and so they're acquiring growth.
The only surprise to me is what's taken so long. This has been actually the facts since 2012, 2013, 2014. Accumulating cash on the balance sheet, low borrowing costs, and sluggish organic growth. What do? You acquire companies and run them more efficiently and take costs out.
Bottom line, you've seen it over your career, over and over again. And the Federal Reserve, of course, keeping rates where they are. I want to get your take on the Fed, because we're about a month away from the next Fed meeting. This is the meeting. Everybody said that we're probably going to see rates move higher in September. Speaking of Warren Buffett, listen to what he said yesterday to Liz Clayman on Countdown to the Closing Bell on interest rates.
Well, someday we will, but they'll probably raise them faster than I would raise them. But what we hear from a good many Fed governors, at least what I've read, sounds like they are going to raise them. But I have no notion on that. I've never talked to Janet Yellen in my life.
But we just heard from Bill Dunkelberg from the small business group, who says small business is not hiring and the economy is weak, so it doesn't warrant another move in rates. Will the Fed raise rates next month? What do you think?
Well, the Fed is very much data dependent. Obviously, we have the announcement today coming out of China that may affect corporate earnings going forward. I think the odds are sooner than later. Obviously, either September or December. So we're going to look at the FOMC meeting come September 16th and 17th.
Yeah.
And by the way, on September 16th is when the next GOP debate is. So we'll see whether these candidates have made a conversation about it.
They're walking a tight line.
Stanley Fischer is already pulling back. When it's not going to happen. Buffett's trying to talk the Fed out of a rate increase, from what I hear him say, which is good for the financial investor. I don't think it's going to happen in September.
We have a market here.
So
I wish we had it. Let's get it over with. I'm so sick of hearing
December.
about it.
It's December or maybe 2016.
December of 2016.
Mike, and then there's China, right? So here, China overnight doing this devaluing of its currency. Yeah. Currency plummets as a result. China's slowing down. That's not helping global growth of the U.S.
China is actually one of the few things that would make me think Fred's going to be right. I think September is kind of baked in the cake, and it shouldn't be, but I think it's set up for that to be. So I think it's September for the Fed, and then not for a very long time after that. One of the things that happened overnight, though, is the China thing. That is huge. It's the biggest thing they've done in many years. I've said with you, Maria, that don't underestimate the ability of the Chinese to come out with new things. This was new. They've silenced all the politicians in Washington because they've made it more market friendly. Yeah. Transfer for conversion for the currency. That's what they've been arguing, but it's going down, not up.
All right, we will keep watching that important development. Rich, good to have you on the show today. Thank you so much, Rich Peterson. Coming up, a new